Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box there. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's had a fantastic evening so far. Looking forward to going over our sentiment webinar today. In fact, let me change this date. This is not November 1st. Today is December 20th. So let me change that real quick. Awesome. But yeah, I just want to welcome you guys here. Looks like we're up and running and good to go. We're recording. I also want to give a shout out to those of you watching this recording. Want to say hello to you guys and welcome you here, and glad that you would participate and come to this webinar. I'm excited. This is our last sentiment call for the 2023. And then we'll have our next one on the second week, or no, the first week in January. So that'll be our next sentiment call. But yeah, let's jump into this. Before we jump into our sentiment lab, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So I have a couple of things I'd like to accomplish today. Let's kind of number them real quick, and then if you guys have other things you'd like to talk about, we can certainly add those in there. Make sure that you get those questions in the chat box if I missed it. If what I have prepared is not what you're looking for, that way we can still cover what you would like me to cover. A couple of things. So first of all, let's talk a little bit about what sentiment is, and how the uses of sentiment, why we use it on the scanner, all these different things, right? Just the basic rundown of what sentiment is and how to use it, okay? That should take like 10-15 minutes. Then we'll talk about the how we're using sentiment on the scanner, the couple different ways to use it. Lastly, I'd like to talk about the way to use the scanner coupled with sentiment for your overnight trades. Okay, this has kind of evolved over time. Definitely evolved the overnight way of trading the strategy. We've definitely learned, had some tough lessons with certain ways of trading it. And we're getting better, right? We're definitely getting better at trading it overnight as an overnight strategy. When I say overnight, it's just basically a trade you set up once a day that typically is in the Tokyo or Sydney session. You let the trade sit for a full, either 24-hour period, or you close it just before rollover at the end of New York. So we'll kind of discuss where we're at currently and how you should be trading it. I'd also welcome your feedback if you guys have found different ways to trade it. Obviously, this is a lab, so I'm totally down to innovate with you guys and hear your collaboration as well. Okay, so that's kind of what I'd like to accomplish today in this webinar. And then the rest, anything else that we have COT report related, we'll talk about in the actual COT report webinar. Okay, so let's first talk about what sentiment is. So sentiment has to do with retail traders. Let's actually pull up the scanner and show you what a sentiment index looks like, which is cool because we have our own sentiment index built in directly into the scanner itself, which is super, super awesome. Okay, so sentiment basically is a metric, and if you filter this right here, oh, by the way, I had somebody ask me this today. They asked me what these percent longs and percent shorts are. I'm probably going to relabel these because it's a little confusing if you're not aware what they are. But these percent long and percent short columns in the scanner, those have everything to do with the sentiment. They are not tied to crowded market. They're not tied to the COT report. These are very much data points that are tied to sentiment. Okay, so when you filter this like this over here in these two columns, when you're trying to get the most long or the most short currency pair, this is based off of retail traders. So this is active retail traders, people like you and me. So this is small money in the market that goes out. It's also known as dumb money, that goes out and buys different currencies based off of their feelings of the market. Okay, that's sentiment. And there's a science to it, and we'll talk about what science that is and how this generally works. But that's so sentiment is is our is and are people who like you and me who go out and place positions. Now, sentiment is tracked by a lot of different sources. It's not like something that you can just pull up on um, like your charts necessarily, although some people have created sentiment indicators. Most brokers have some kind of sentiment index. Like Awanda has a really good sentiment index. If you remember or have an account with Awanda, it used to be that you didn't even need like 5, 6, 7 years ago, you actually didn't even need an account with Awanda just to look at the sentiment index. Now you do. You have to have an account. You actually have to pull up, as far as I'm aware, you have to actually pull up the um, your account on the web trader platform with Awanda, and then there's a little application that you can put up instead of your chart where the sentiment of current Awanda traders are. Okay, so you can get to that. It's just a little bit more work. But there's a lot of different places where you can track sentiment. So obviously you can just track it here. I mean, other places might be a little bit different, but ours is pretty much what you'd find everywhere else. So when you pull this up, you can see right here the CAD franc pulls up to the very top, right? When you filter this way, right? And what that means, and if you hover over the bar here, it'll actually tell you what percent long they are. So 93% of retail traders are currently long on the CAD franc, and only 7%, you can see as I hover over the short column, 7% are short on the CAD franc. So what does that mean? What does that tell you? Well, what it means is that retail traders, people like you and me, 93% of them in general, collectively, have a bias to buy the CAD franc, at least of those that have a position. Of the traders out there that have a position on the CAD franc right now, 93% of them are buyers and 7% are sellers, right? And then you come down here in the next one, you've got on the Euro franc, that's just a little bit less. It's almost right up there though. The Euro franc has a 92% sell. And then you've got a right here an 8%, or excuse me, 92% on the long side and 8% on the short side. Okay, so those are pretty biased. Now, the big question is what causes this, right? Why do retail traders, why did they do this? Why did they go long here? And then if you flip it the other way, right? If you go the other way on this like franc yen, why are most retail traders 81% short on the franc yen and only 19% long? What causes this phenomenon? So basically what causes this phenomenon goes back to the very essence of trading, actually, which is like buy low, sell high, right? Most retail traders are taught to buy low, sell high. And that's actually not bad advice when you go to the store or when you buy a house or when you buy a vehicle. And it's also not necessarily bad advice with the right information when you're trading. The problem that we see with a lot of traders is they typically sell high and um, or they I guess most retail traders sell low and sell even lower, or they buy low and sell lower. They just do the exact opposite. Um, and why do retail traders do that? So it's because of the information that they have, right? So I won't go into, I've got a lot of different thoughts on this, but the main point I want to make is when you decide if something's cheap, like when you go buy a house, like if you see somebody say like, hey, I'm trying to, if you find a house you want to buy and you find out that that house is selling at a $15,000 discount or something like that. Well, you get excited because you're thinking, well, hey, I might be able to buy this house at a $15,000 discount. Or, if you find a car on Facebook Marketplace you're thinking about buying and you're able to get the seller to drop their price a couple $1,000s, you're getting excited because that's a bargain now. Like you're getting a good deal, right? Um, when you go to the store, same thing, same concept, right? You look at the prices, and if you see, those yellow tags or orange tags, and it says clearance right here, we got a clearance, and they're trying to sell something, 2 for 1 type of thing. Obviously, you're going to feel better about that purchase because the information that you're provided suggests that you're getting a discount, right? We love discounts, right? And traders love discounts too. So what we do is, and this is what we're pre-programmed to come into the market to do, which is, if we look at a chart, um, let's go to that CAD franc as an example. So when we come to this CAD franc, um, we come over here and we see this thing dropping over this big period of time here. As you can see, over the many, many months here, this over several months, this CAD franc has just been dropping like a rock, right? So naturally, a lot of traders are going to want to buy, and they have been buying into this for a long time now, and they've been getting really train wrecked along the way. Yeah, they've absolutely been kind of train wrecked in the process. Okay. What else did I want to mention here? Okay, so they've been buying along the way. So that's what retail traders do is they view this and they say the information they're given is that the market's been coming down. So they're thinking, hey, this market's absolutely coming down. So I'm going to go ahead and buy into this as this comes down because they believe it's a discount. Right. Now the problem is that a lot of retail traders like right here, for example, they see this as a discount and so they buy. And so, the retail traders will come in here and they'll say, I'm going to buy here, and then the market will continue along. Let's go ahead and do a little replay here. And you can see it drops a little bit more. And the retail trader says, oh my gosh, let's go ahead and buy some more down here. Let's get some more positions, right? Because that's got to be a discount. And so most retail traders just base this off of um, they just base it off of what they see, right? And so, oh, okay, it keeps going down, so they buy even more. But the problem with this type of trading, and you guys probably could diagnose this yourself, is the problem with this type of trading is it blows accounts, right? How many of you have ever done this, at least in a demo account? Maybe you've done it in a live. I've done it both in a demo and a live account. And I've learned the hard way that this style of trading usually um, is not good. You'll wind up, blowing your account with this style of trading because you'll just continue to buy, 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 buy. But this is how retail traders create sentiment because as the market continues lower, it creates these huge biases, like you can see with the CAD franc right now, 93% long. Again, why is that? Because of this. It just continues to perpetually go down, and retail traders are just more and more. This is also algorithms, right? A lot of Martingale algorithms get stuck in these. If they're able to claw back, they do great. If they're not, again, this is just how they blow accounts, right? So it has to be very controlled if they're going to do something like this. But all I'm trying to say is that most retail traders are typically not very good traders. And because they're not very good traders, it makes sense generally to trade against them, right? So when we take trades, we've programmed the scanner to actually trade against these guys. So when they get mostly long, we try to go short. So with these ones right here, you can see, this is 88% long right now on the pound franc. So we want to go selling. With the NZD franc, most of these are long, so we want to sell, and so on. When you get to about a 50-50 range, a lot of these are closer to 50, 50%. This euro pound's at 52% long versus 48% short. That's not really helpful to you and me because who the heck knows, right? Who the heck knows if it's going to go up or down? So you can have basically a neutral signal with sentiment if there really is no bias. Okay, so that's something just to be aware of with the sentiment. And then when you start to come down to the bottom here, you can start to see these turn into strong buys like this pound CAD. It's a strong buy. Why is it a strong buy? Well, because 66% of traders are short right now. So we want to be we want to align ourselves with the 34% that are long, right? Now, is this something that works 100% of the time? No, absolutely not. Nothing works 100% of the time. But it is important to recognize that when they start to do this, we want to start aligning ourselves in that direction. Okay. And when I say that direction, it's the direction opposite of what most retail traders do. Now, one last thing I wanted to share with you guys. There comes a point with retail traders, just like what happens with the banks. Okay. So when retail traders get super duper duper long in one direction, not just generally biased, but like when they get high up into the 90 percentile biased, there comes a point where you actually no longer want to go against the retail trader. Why? It's the same thing with the big banks. When the banks get super biased one way, they're going to have no other option but to exit that position. So the scanner is actually built. Now, this is interesting logic here, so pay close attention to this. The scanner is actually built to introduce a uh, a signal that will actually follow what the retail traders are doing, so long as they get to their crowded market stage. So, for example, the USD franc is actually close to um, it's kind of interesting. This is actually really interesting stuff right now. The Euro franc and the USD franc, they're both in crowded market phase for the banks, right? The banks have these really big long positions, and they're trying to exit their long positions. That's why the long-term signal is to sell, right? It's a strong sell. But as far as sentiment goes, we've got a small buy signal. Now, why do we have a small buy signal here on these two? Well, it's because these uh, these retail traders are super long and they have to get out of their uh, well, so basically the logic here is a little bit different. So when these retail traders, they you actually want to follow what they're doing when they get to this point, because when they get over leveraged like this, um, and the market's been going down, so that's why this is different. So the market's going down when the retail traders are super long. And so when this happens, at some point, the market has no choice but to start to come the other way, right? So it's just something to be aware of when you're looking at these signals, is that um, a couple of these might get to their own crowded market, like the USD franc or the Euro franc, CAD franc. These three are in sentiment crowded market stage, which is why you're seeing a buy signal amidst the fact that retail traders are super long right now, which usually would be a strong sell. But we're being a little bit cautious with it because they are pretty biased. So we're trying to focus on these other ones right here, where they are biased, but they're not as biased in, up in the 90%. So just another thing I wanted you guys to be aware of when you're looking at sentiment is that crowded markets are also a thing here, but they are different with sentiment, because in sentiment, the market's going down significantly in this process. And at some point, the retail traders will actually be right. And when they are right, it's usually after they've had and gone through so much carnage in the process. And the scanner's already programmed to let you know when that's about to happen or when that's already taken place.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call, in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
That's what sentiment is in a nutshell. Is generally it's a contrarian indicator, and we generally want to trade against the retail trader in general, and most of these signals are aligned to trade against them. Like these ones right here, all of those are designed to trade against the retail trader. These are all neutrals because there is just no signal sentiment wise on those ones. And then all of these are aligned to trade against the retail trader on the other side down here. Okay, so there's that. So that's how sentiment works. Now let's discuss how it involves with the scanner. So we've already discussed a little bit how it works with the scanner. You know, we've talked about how you can filter different things here. You can filter these two columns for those that didn't see it, the percent long and percent short. Those two columns are very much aligned with sentiment. So these are tied to sentiment. These are not tied to crowded market. They're not tied to any other metric. It is very much the sentiment index. So hopefully whenever you come in here, if you ever want to filter these, that's what you're filtering is you're just filtering sentiment. That's all you're doing. Okay. The other way you can use sentiment, and this is what I love about the scanner, is the fact that you've got this overall signal. I love the overall signal because it we mentioned earlier that nothing's 100%, right? So sentiment's very much the same way. You don't want to really use sentiment as a standalone indicator. We actually did this several months ago when we introduced the sentiment strategy. The very first version of the sentiment overnight strategy was to simply just take a trade every night. Um, just pick the top sentiment trade and just go with it. And some nights it worked really great, and other nights not so much, right? And to be honest, every strategy's got stuff like that. Like you're never gonna have like um, dozens of days in a row without a losing trade. That's just not the reality of the market. Um, there's always going to be that anomaly that gets in there and throws off your nightly trade or whatever it is, right? So you can't expect those results every day with anything. But what I like, and this is something that I'm really passionate about, is being able to confirm trades, right? So not just simply taking a trade because one indicator is really strong, right? We want to confirm or invalidate trades too. It's fine to invalidate a trade so long as the indicator says so, right? Or multiple indicators, multiple metrics. So when we use a scanner, what I love about the overall signal is that it involves two different sets of COT data. One that's a weekly, more of a derivative of what the market's doing this week. And then the overall signal also includes what the long-term signal is. And it also includes sentiment. And then the other thing that it does is it doesn't just include those three things, it also takes into consideration the the impact of those three things. So depending on the velocity or the power of each thing. So if one's a strong sell or a strong buy, one metric saying that carries more weight than one that just says buy or sell, right? Or something that says neutral. So it's not just looking at all three things, it's looking at the collective score of how strong something is. So for example, when you have these weekly shifts on COT data, some of these shifts are really, really strong, right? And so we want to take that into consideration if something is really, really strong. We don't want to just give up on something just because um, you don't want to miss out on a trade if just because one metric saying another one thing and another metric saying another thing. Okay, so so now that brings us, okay, so I think everyone kind of generally knows what sentiment is now. I think everyone pretty much knows um, how the sentiment interacts with the scanner. Um, Now I want to move into how to use this as there's a couple of ways you can use this as like an overnight strategy, okay? Because one of the goals of the sentiment lab, this that we started this back in early October, was to provide another way for ambitious traders and active traders like you guys to create an income pretty much daily. Like find a way to take like a overnight trade and capture the New York and London overlap which for a lot of us here in the United States, I know some of you don't live in the United States, but that's where most of us live. And so the overlap of New York and London is where a lot of the volatility really takes place. And that unfortunately is where you get your best sleeping hours, right? I mean, if you live in London, that's just in the middle of your day. If you live in Australia, that's your evening. So not too bad. But yeah, for us, it's like, okay, London opens up at 3 a.m. Eastern, and no one wants to get up at 3 a.m. That's like the worst hour of the day to get up. You need that hour of sleep, right? Like those couple of hours in there are just like where the whole world sleeps, right? And you got to get those hours in. And I actually used to get up. I had strategies I used to trade like 7, 8 years ago, where I'd get up and trade the London Open. I had this like, and I still have this strategy. And it worked. I just didn't think it was worth my sleep anymore. My wife didn't like it. Obviously, I'd get up in the middle of the night. But what I would do is I would just go up, I'd get up at London and a few minutes before I'd pull up a 5 or 15 minute chart. And then just when the opening candle of London, came in, if the previous candle was red, I'd actually go long. If the previous candle was green, I'd actually go short. It was kind of an interesting little strategy. And all I was looking to do is just make 5 or 10 pips and do that in like um I would just do that every London session. And I actually had a lot of success doing it, but it would just wreck your sleep schedule so badly. And it was just to get 5 or 10 pips is all I was trying to do every night. Anyway, I mentioned that just because the biggest volatility in the market does happen during the London New York overlap, and I'd hate for you guys to miss out on that. Um, and so one of the ways you can capture that is by trading overnight, having these overnight trades, which is kind of cool. Okay. So this has evolved over time. So what we used to do is we'd say, okay, come in here and filter this by sentiment signal. Um, and oh, and there's a lot of Bill, there's a lot of yeah, I think I remember, maybe I even shared that with you a long time ago, but I think there's even other companies out there that teach or preach different London Open strategies. There's a lot of manipulation that happens at the London Open at 3 a.m. And so if you have the time to get up, there's actually a few things you can do to grab 5 or 10, 20 pips in 5 or 10 minutes, 15 minutes. But I don't think I think there's other ways to make money, definitely other ways to do this. So that's awesome. But yeah, what we used to do is we'd come in here and we'd say, okay, let's filter this by sentiment signal. We'd filter this by the most long and the most short. And then we would just, pick the top one, two, or three, or four trades and just go in the opposite direction of what retail traders are doing. Now, again, this works so long as um, the market's in a position to go in your favor. But the problem is you can have these days where there's lots of consolidation, news events and things like that, where that can really throw off your trade. So what we ended up deciding to do is filter this by overall signal. Okay. And we added this feature like a month and a half ago, something like that. So this overall signal is really, really nice because it looks at a lot of different data points, as we mentioned earlier. And one of the issues I ran into even with this and this happened with both the earlier version and then just going off the older overall signal, taking overnight trades was using a half an average daily range stop loss. Let me know if in the chat box if you guys have had this issue, but one of the things we'd have is if you have a tighter stop loss, you'd get these whipsaws overnight. And unfortunately, if you get whipped out, it just stinks because you'd lose. So one of the things I started doing, and I've had better success doing this, and I wanted to know your guys's thoughts. Have any of you tried this? I've actually started with the overnight trades. I actually started using just a full average daily range. So I know it's a lot more pips, and on the winning days you typically make a little bit less. But it has certainly helped with not being whipped out on the good days. So, and we could go away from this if this is not good, but I've tried this and have had a little bit more success just using the full daily range as my stop loss. Um, so it's up to you if you want to try that, but that seems to have helped a little bit too. Okay, the other thing that we have learned, um, yeah, and I think so Lee says I was using a half an 80 yard, it was a little hit or miss. Yeah. What about 75% ADR? I think that might even be better. Yeah, because a half an ADR is tight on some of these. Like for example, when you pull up this euro pound, a half an ADR of the euro pound is what, like not even 20 pips. That's 18 pips, something like that. It's really, really tight. That's really, really tight. 18 pips or 19 pips or whatever that is. So I think 75% would be good because 75% of that number is going to be closer to 30. It's going to be like what, 28, 27, something like that. Um, and that might be better. So maybe we do 75, like on an overnight trade, do 75% of the ADR might be better. Because pretty much by the time the market hits your stop loss at 75% of the ADR, the trade probably wasn't going to work out. It just wasn't going to work. So you might as well take your lickings and go. That's kind of how I feel. You guys tell me, chime in if you guys think that you feel the same or if you think something, we could do something different. Okay, so that brings me to the next thing. So here's the other thing that we've been doing. So there's two ways you can trade this, guys. So everybody should be going off of, I want to make sure it's very clear. If you're taking the overnight trades, um, if you're taking the overnight, if you're going to subscribe to that model of trading, um, I would go off of the overall signal. That's what we've currently done. Now, this can be kind of confusing too, because this week we have like a dozen, there's like 10 or a dozen trades here you can pick from. And you could take technically all of them, but that's a lot of trades to take every night, right? So another thing you could do is you could actually just filter these and you could just kind of comb through them and just find the ones that have, you could go off of the ones that have the biggest shift, which might actually be one of the better things to do. You could go off of the ones that have the biggest sentiment as well, like the CAD yen. This is a good one. It's got a really good shift and sentiment signal strong buy. Pound CAD, same thing, not a really good sentiment signal, but the long-term and sentiment signal are looking really good. Um, um, yeah, I think when overall and sentiment agree is a good idea. And these are the three that really give you these three right here. Actually, this one and these three right here look really good. So you could go off of those three. And I think those three have done very well this week. CAD yen long, pound CAD long, franc yen long. I think all of those have had a successful week so far. So yeah, I think that's a good way to filter it is go off of overall first just and then go off of the ones that have sentiment signals that align with the overall signal. Not a bad way to go. Okay. Now, there's a couple of ways to do this still. So you can just take flat, just every single trade that has an overall signal that aligns with the sentiment and just trade those every single night with an average daily range stop loss. The second way you can do this is do a modified martingale. Okay. So what does that look like? So a modified martingale. Now, why would you want to even do a modified martingale? So again, like we said earlier, it's very possible to have a multiple losing nights in a row. Okay. And that would be very frustrating, right? So the idea with a modified martingale is that in the beginning, you'll lose less if you have a losing period. But by the time you get to a winning night, you'll have a bigger position or multiple trades to take. What we've been doing with the modified martingale, and let me know if you guys have changed this or if you guys have had success doing this another way. But what I've been doing is what I'll do is I'll take the best trade from this basket. So, like we'll take, this CAD yen with, it's got the best shift, strong buy on the weekly shift. Sentiment also is a strong buy. That's probably a really good trade to take this week. Every night, even it's probably not a bad idea because the thing is, like, even if you have a couple of losing nights, there should be a few or several winning nights during that same week where the profits are just really, really good. Like that market's going to move just straight in your favor. I mean, that's the whole idea behind the scanner and the weekly shift is just to put you in the right direction for the week, right? So what you could do is a modified martingale where you go in and just take the number one trade. And if that trade wins overnight, you'll go ahead and close your profits. Make sure you close out. Oh, by the way, this is another thing too that we changed like a month ago, 2 months ago. Instead of holding a full 24 hours, it seems to be a really good idea to close just all your profits by rollover. When is rollover? Rollover starts at 5 p.m. Eastern. Okay. So as long as you have your trades closed by 5 p.m. Eastern every day, you should be good. Um, yeah, so maybe close them at your lunchtime, something like that, or a little after lunch would be good. And then you'll just come back the next evening and do this all over again. Okay. I think that's probably the way to go. Because I've had this happen to me, and it's also happened to several of you, where I'll hold a trade that might even be profitable, and I'll get into rollover and leave the trade, and I lose money because it stops out because of spread. Spreads widen during that hour, and I lose money. And it seems to happen a lot more often on my live account. My live accounts tend to even be worse than like a demo. So, okay. So, let's see what else. Okay, so let's continue the conversation about modified martingale. So, again, one way you could do this is day one, let's say it's Sunday night. You take the CAD yen. Let's say that's the best trade. It's overall signal strong buy. Sentiment agrees. Really good shift. That's probably the best trade you could take this for the week. As far as like, overnight trades and even a weekly trades go, that's a really, really good one. Okay. Take that trade. If it wins, great. The next night you just take the same trade over again. Or, if you've got another one where the weekly shift, long term, and sentiment all agree, then maybe go with that one. But otherwise, maybe even just take the exact same trade over again the next night. Now, let's say the next night, this is now Monday night, you lose. Okay, you lose, happens. Okay, whatever. Now, another thing too, let's say you don't hit your stop loss, but you're still down. What do you do? Okay. Well, you actually still go ahead and close the trade before rollover and just put it in your journal as a loss. Like just close the trade as a loss. And then the next night you'll do the same thing again, but now you'll trade as such because you just lost the previous day. So you'll go ahead and close that trade. Let's say it loses the next day. Okay. Um, so this is Monday night. You lose that trade. So now we're to Tuesday night. So you had the first night you won, second night you lost. So now we're on the third night of the week. So this is now Tuesday night. You come in and you say, okay, great. I lost the previous night. Now I'm going to take the top two trades. So instead of the top one trade, I'm just going to take the top two. So you come in here and you say, okay, the CAD yen looks pretty good. Another one that looks pretty good is the um, probably this franc yen because the shift is positive and the sentiment is a strong buy. So you probably go with that one. And you could even go pound CAD. It doesn't really matter. Again, I just go ahead and pick an overall signal that makes sense. And I think that's what Lee mentioned earlier is perfect. Go with the one that matches sentiment. I think that's probably the way to go. Okay, so now you take that. So now you take two trades. This is now Tuesday night. Now, if those trades win, you wake up in the morning and you're profitable and it covers the previous day's loss. Yeah, go ahead and close them around lunchtime or before rollover. Put that in your journal and you move on. The next day you go back. Now Wednesday night you just take one trade. So you're back to that sequence. It's a modified martingale. Okay. The next night, let's say you actually lost Tuesday night. Let's say now you have two trades that have lost and you're now down again. You put that in your journal. Now it's Wednesday night. Wednesday night, you do it again. Now you take the top four trades. And then you just take the top four trades. If those trades win, or at least a combination of them wind up being profitable and it covers the previous day's loss, then you can go ahead and go back on Thursday night back to the number one trade. Now, let's say again you lose. Let's say you lose four trades on that fourth night. What I ended up doing is when I get to Thursday night, I actually don't add more trades. I just keep it at the top four and until I get a good solid win. Once I get a good solid win with the top four, I go back down to one trade again. Okay. The idea is that you won't have to go up to the top four very often, but if you do, which has happened to me many times, you'll typically get a win there. If you don't, then you just stay at four until you do get a win. The other thing that helps is what we were doing is a half an average daily range stop loss and a full average daily range take profit. I think we should keep the full average daily range take profit. So nothing's going to change with the take profit, but I do like the idea of 75% of the average daily range being your stop loss. That should help with whipsaws and other events that may happen throughout the night. Okay. Okay, so that's basically in a nutshell how to trade this. Now, the other way to trade this, if you don't like the idea of a modified martingale, is you can just simply take these trades. So there's nothing wrong either with just taking these trades. 75% of the average daily range stop loss, full average daily range target. Just take them every night, take the top four, and then just every night take four. So you never change the risk management. You never play with that at all. You don't adjust or manipulate it. You just keep it the same. Okay. That actually works too. The only thing that I don't like about that, and I just wanted to share my opinion on it, is it does seem like your weekly win-loss ratio will be vastly different. Like if you use the modified martingale, you're likely to have a profitable week practically every single week because out of the 5 nights you have to trade, most nights or at least one or two of those nights will be profitable. And that's all you need to win with a modified martingale is just one profitable night a week. That's all you need to make money. That's it. And if you get two or three wins, then you're golden. Okay. Now you could on the flip side, you could lose not, I mean, it's still controlled, but you could lose a significant amount if every single night was a loser, which can happen, definitely could happen. Again, the idea of the scanner is powerful enough that you should get at least one night, um, 2 nights, 3 nights where you'll get profits. I've even had weeks where every single night was profitable. Not as common. I don't want to say that that's normal. It's not normal to win every single night. So by the way, if you do have several losing nights a week, that's normal. It is normal to have that. The idea is that when you do have the winning nights, if you use the modified martingale, you'll be able to get a um, squeak out. Like on one of those days, you'll have a really big win and you'll go shopping and you'll be excited because you actually made a significant amount of money on those nights. And that's really all you need with a modified martingale. It's just one good solid day a week, and that makes up for everything, and it puts money in your pocket more so than you had the previous week. Um, and from what the feedback I hear from you guys too, and this is me personally trading it, and the feedback I hear from you guys is that that seems to be the most profitable way. Now, if you've never traded a type of martingale system, like it can be very scary. Um, and to be clear, I'm not the biggest fan of martingale. At the same time, though, if it's controlled and you've put limits and barriers on it, I actually believe it's one of the best ways to create money in Forex. And that's my own personal opinion. Okay. I actually have several robots that I subscribe to. I have different accounts that trade for me, and I use other people's services. I have several services that I've subscribed to where, copy traders, I have my own that I offer with the COT report. And then I also invest in other people's systems and EAs that they've created that uses Martingale. Practically every single trading system on MQL5 Marketplace, anything on Signal Start, practically all of them use some kind of Martingale or modified Martingale to some extent. And they're extremely profitable. So I don't want it to sound like it's the most evil thing to do, because it actually can be one of the most profitable things you do in the market. But it does come with some risks, right? So it does come with some risks. And so that's why I like what we do with the overnight trades is it can be very successful so long as you put a cap on it. If you have an incessant, string of doubling down, like if you, the thing, I mean, have you guys ever heard that story? It's like a folklore story about the guy who was offered a bag of rice or doubling a grain of rice for 30 days, right? If you double a grain of rice for 30 days, I can't remember, but it's in the millions. You'd have uh, millions and millions and millions of grains of rice if you were to just double every single day for 30 days. So doubling is a very powerful concept. So that's another thing too. I'm not a big fan of doubling positions, although I technically do that, day one. If that works, great. If it doesn't, you double the next night. Then if that doesn't work, you double the next night. But that you only double two times. Um, and that's it. The other thing that helps too is our take profit is bigger than our stop loss. I think that helps as well because when we do win, the profits are bigger, not only because of, now you got more trades, but when you finally do hit that big day of the week where everything just goes right, you typically have more trades stashed in there, and you typically also have a bigger target. So there's more money to be had from two different standpoints. You have more money to be had because you have more trades and it happened to be a winning night. And two, you make more money because the target's already bigger in the first place, right? So that's one of the reasons why I love trading so much. Is there's so many ways to find success. Like there's so many things you can do to create success, and to you have these things in your toolbox that you can play with, and you can mess around and kind of change things up to the condition of the market or to whatever your style is, whatever you're trying to accomplish. There's a lot of things you can do, which I love. You don't really have that in other places. Okay, let me get to some of your comments. I apologize if neglected you guys a little bit. I do apologize. Mohammed says, "Hey Steve, for the first time attending this week, what did I miss?" Okay, so Mohammed, what started with was we just kind of described what the sentiment index is, how sentiment works, and how it works with the scanner, and then we talked about how the strategies evolved, and now we are discussing currently how we're currently using the overnight strategy in conjunction with sentiment. Okay. Um, this is recorded, so I would suggest if you want to come back, like this will be posted right after you can come back and watch it. But I just wanted to uh, let you know that that's kind of how we started the webinar. Okay. And Lee, you mentioned earlier, I'm thinking when overall and sentiment agree. I think that's great. So just make sure everybody's clear on that. When the overall signal agrees with sentiment, that's a trade you should take for the overnight. Okay. I just want to make sure that make a note of that mental note, whatever you got to do. Just want to make sure that that's understood that when you're trying to filter these, sometimes we have a lot of signals. Okay. Like we do this week, there's a lot of trades to take. So when sentiment or when the overall signal agrees with sentiment, like these four do, or these three, those would be prime candidate trades to take. Prime candidates. Okay. Mohammed says, "Hi Steve, I'm in pound dollar buys. What do you think of the trade?" Let's take a look. I haven't looked at the pound dollar. I haven't been trading the pound dollar a lot right now. Let's take a look though. Um, hmm, I don't know. And let's actually see what the scanner says. I haven't really. Let's see what's my bias on the pound dollar this week. I can't remember. Is it a sell or a buy? I can't remember what I'm doing. Okay, pound dollar is a strong sell this week because of a slight negative shift and long term is a sell. So that's the signal I have. Um, so I mean, obviously I'm going to be kind of a little bit biased to my scanner, but a couple of things that just popped off to me real quick when I saw the pound dollar here. Um, this is a lower high right here than these highs. This was a double top when it formed these two highs right here. The market just basically came up to liquidity and then it pulled back. The other thing that we've got going on is a slight lower low than this low. And it just seems like we're continuing to kind of slide off and the market's kind of it's slumping over. So I kind of think that it may continue lower. But again, it could totally, I mean, I could see how this could just rally out of this. So I'm not exactly sure what to tell you other than my initial look at this is, hey, this might actually continue to slump over. But again, I don't want if you've got some other analysis that tells you to buy, then I don't want to deter you from that. Other than just my initial look. I mean, I've only looked at this for 60 seconds, and that's my initial contact with the pound dollar is, hey, recently we've got lower lows and lower highs. Scanner says, generally sell this week. So, I have to probably agree with that. But I couldn't tell you. I mean, it did go up earlier this week. You saw this big move. It's already pulled back from that, but you know, who knows on that one. I couldn't really tell you. That's just what I initially see here. So, Lee says, I missed part. I missed part. If you have winning trades then go back to one pair. Yes. So if you have a winning overnight trade, okay, and you close it, after lunchtime or before rollover, which is probably, try to stay consistent with something like that. Close your winning trade, even if it hasn't hit the target. Just close the winning trade, log it in your journal, put it in as a profit. And if you have a winning trade, well, then obviously the next night you're just going to go back to just one trade, just every night. Bill says I have to use proper stop loss and lot size calculators. Yes. Yep. So I typically risk 0.25% per trade. Um, because the other reason why I do a quarter is because if you end up having to get up to 4 trades, then you're risking up to 1% of your account. And I'm okay risking 1% of my account on an overnight trade. I just don't want to do that every night. Right. So if I have to get up to 1%, I'm okay with getting up to 1%. Right. Let's see. Lisa's, are you setting take profits on overnights? Had a few nights when I trade jumped up during the London session and then backed off during the yeah, definitely use a take profit. I'm just using an average daily range target. So yep, awesome. Yeah, and Mohammed, this will be uploaded. This webinar will get uploaded, and within 30 minutes it'll be rendered. I uploaded actually immediately after the webinar, but Zoom takes like 20, 30 minutes to render. So all right, guys. Well, I'm going to take an 8-minute break before we get into COT report. So I appreciate your attendance today, guys. Thank you for coming. Have a fantastic rest of your evening, and we'll see some of you in the COT report webinar. Thanks for coming.